following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a good Friday morning here. A lot of things going on today. S&Ps did that turnaround. Just talked about trying to trade that on the short side against some. I'm showing this in the den right now. Let me make sure. I had a couple of computer problems this morning, so let me make sure we're on the same page technically here. Got a ton of earnings to talk about. So here's the S&Ps. Talked about trading this from the short side, looking at that, a couple of resistance areas up top, 2146 and basically 2150, that neighborhood. And yesterday got up there and just came off like a freight train, bouncing a little bit this morning off those targets that we talked about initially on the short side in that neighborhood of 2118, 2119, reached a low this morning of 2116. So again, trying to bank profits when we kind of get into some of these inflection points from some of the calls that we make. And again, they're not always going to work out, but again, trying to play defense is the most important thing. And then where do you start turning things into a free trade sometimes? And I'm still very short-minded here, but when you get into some of these inflection points, you got to do what you got to do, take some profits. Can't go wrong doing that. You guys know that. So weekly close again below this 2133.34. This is our weekly showing that. All important weekly close would just be awesome below that particular longer term inflection point. But again, 2118 reached 2116. Got to pay attention to that one. The trade that I've been super interested in, as you guys know, the yen trade, and I'm going to do a double hand raise on this one. This one looks so good, it was scary. And sometimes when they look that good, sometimes they don't work out because everybody else might have a little bit of the same attitude towards it. But just some of the things Joey and I were talking about, just this thing spun around right above that profile, 103.50, gave you a sick chance to play defense there. At the same time. And here's a 240s price action last night, well above a profile that came out below. That's bullish in nature. You guys know that. So what do you do with it now? So if you're just kind of going, oh my God, I missed this thing. You got to wait now. You can't just buy this thing on the highs. But people who have been digging in on the long side for this particular trade, I don't see any reasons to take it off at this stage. I mean, these are one of these things, the worm is turning, the yen's going to get weaker. This has been a long time coming. And this is, again, we talked about how do you make your whole month and year sometimes. These are the types of long-term trades that you just want to leave some on. Like Joey was talking about, some of these instruments that you get into as longer-term investments, like, the Apples and the Facebooks of the world and the Amazons and what have you. We're going to take a look at Amazon on this show today, but you just almost have to suffer through some short-term gyrations, and I really feel like this is one of those trades, the yen trade. If you guys have any comments about the yen, please call in, or the S&Ps. And remember, a lot of people start laser focusing sometimes on the S&Ps only, and they just kind of keep that on their radar screen, and they want to beat it every day. And it becomes monotonous sometimes trying to trade the same instrument. Look around, use the scanner, try to find some opportunities that are really lining up other than the S&Ps a lot of times. I mean, it's real easy to start trading the S&P minis. I mean, you got these platforms now, and it's bouncing around, and you're going to beat the broad market. Don't fall into that trap. look around for opportunities. They're out there, and that scanner actually puts a lot of them on the radar screen. And this one was in that. Well, I mean, on the currency side, if you're going to put this into the basket where you're doing searches, was in that uptrend, pull back into resistance type custom sort, pre-filtered and everything, the whole 9 yards, and also was kind of allowing you to see when these long-term trends are broken. So just using that for example. But British pound, here we go. Talked about a tight profile. In fact, yesterday on the daily. The weekly, there's just nothing down here, as you can see. We're just this really looks ugly for longs. I mean, super ugly. So we talked about, in fact, yesterday, not really trading. I mean, this thing explored the entire fair auction, as you can see, but really took a look at this and said, you know what, tight profile is probably more advantageous to look at this trading breakdowns or breakouts outside of this profile. So we're having a little bit of a breakout now. That long-term weekly looks sick, and this is again trading with the trend and trading the breakouts or trading resistance. So I'm going to blow this up. So your long-term MO on the pound, in my opinion, and again we're just starting to breach this area, but when we're in that phase, you're looking for resistance. Or breakdowns, that's the higher probability situation. And again, you always, in my opinion, want to be trading with that mindset. Joey, again, going back to reference some of the things that he has said that I've agreed with, because I agree with a lot of things he says. You don't want to lose sight, kind of step back and let the noise happen. You don't want to lose sight. What's the long-term MO? When I say long-term, what's the kind of the weekly, in my case, I show a lot long-term being weekly here. Sometimes people look at monthlies, but I think in this day and time that monthly situation can be a little out of touch sometimes. But you want to look at, there's the resistance, the long-term trend's down. I'm beating a dead horse to death here, but again, step back and get away from the noise sometimes and try to figure out where you're going to enter trades based on where the leverage is. So yesterday we hit that 122.83, 122.72, and got in the neighborhood, and now we're down, and we're also getting a little bit of a breakdown here. And I don't really see a lot of reasons at all to be nibbling on the long side here, unless you are just looking for a very short-term trade bounce, but that would be against the odds. And again, any comments? More than welcome to talk about them. The euro trade, this is even becoming more and more attractive by spinning around down below this 109.34. We're going to talk about this a little bit more. The more this stays below this daily info low, the more probabilities I believe are in your favor for this to make another leg down and at least hit 108.87 and lower. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Somebody asked me to throw the bonds up here. And just reading the den here while we're moving forward. Before we look at the bonds, here's the daily on the 30-year. How many instruments do I trade? I try to keep position sizing is one of the parts of the equation when it comes to trading in general. And again, we've talked about you go to, hate to liken this to Vegas, but you play the only way to win is to change your bet because they have the edge. But I like to think of not only getting more of an edge in being correct more than 50% of the time with some of the information that we show every day, but also kind of putting that position sizing component into things. And the position sizing component, somebody asked about, how many instruments do I trade? I try to keep it light in general and try to spread the risk out. A lot of people will say, you know what, I only want to trade 5 instruments because I want to get the temperature and the pulse of those 5 instruments and understand them well and understand how those instruments act as far as volatility and things like that. I don't really, this is me personally, and again, every different strokes for different folks. You got to find out what is your game plan and what's your business plan for moving this business forward. And my plan is to spread the risk out. And I try to trade a lot of different instruments lightly, but when certain things line up, like the yen trade, for example, and I've been talking about that, kind of licking my lips over that one. That's where you kind of increase the position a little bit. That's a longer term scenario, a great long-term setup, and then you're just kind of playing defense. And I don't really get too jacked up about any position. I try not to because I've learned my lesson about that. But, and again, hard knocks there. But when things line up on a long term, like we've talked about, sometimes you can make your month or even year by those kind of riper setups. and when things are kind of lining up in a lot of different areas around the globe for that particular type of trade, going back to the end, you do want to go a little bit heavier. But I try to, spread the risk out. I trade a lot of different instruments. Try to trade them lighter because I don't have to devote a lot of mental capital or stress to a lot of those positions. Just play the odds. It is what it is. Put the defense plays in, and I understand. I trade a lot of OCO or OSO orders. I don't know if you guys have those on your platforms, but those are the type of things where don't have to monitor them that much. Sometimes you get stopped out of things that are really good, but that's okay. And sometimes you take profits a little earlier than you looking back and over the trade later, it's like, why in the world did I even put a target in on that one? But that's my stance on it, and it keeps me kind of sane and keeps the stress off of me, so I can actually kind of step back and really, objectively look at things all the time. And again, I made the mistakes of, kind of getting heavier on things and kind of contracting my universe of instruments down to what, there's a lot of mental stuff that goes on when you're when you're trading. But to answer the question, I try to spread the risk out and trade quite a few instruments at the same time. That includes stocks and futures and currencies. So now that I've completely wasted 4 of your minutes, here we go. Let's take a look at the 30-year. Now, this is something that we talked about, probably not having a lot of direction on the 10-year or the treasuries in general. Joey and I talked about that. Now, we had a complete kind of throw up yesterday on the 30-year, and I was a little bit more partial towards probably just buying support and selling resistance on this. And the good news is about these profiles is, when we start getting into this manner of below the profiles, it really kind of says, okay, well, there's a stop on the game that I was playing, and it's okay to be short, not okay to be long. So you kind of really feel weird about trying to, hang on to longs below these inflection points in this particular example. So the 30-year now, there's nothing to play defense against on the weekly or the daily. And if you're going to be looking at, got a pretty wide profile here on the 240, this is the really only thing you have to hang on to at this stage, 161.29, and you've got something up top, 163.19, and then there's that 164.02. But not exactly super excited about trading this. I mean, there was, they could come out. Italy's kind of sitting there on the wing now, that they could look towards that, even though some of the economic numbers in the U.S. have kind of ramped up a little bit. They could just say, you know what, God, we got some problems overseas and blah, blah, blah. And then they might not raise rates in December. And, anything can happen with that crowd. You got a new political thing happening. And, even though the odds are with Hillary right now, that was the same as Brexit. It was just, who knows what's going to happen? Who knows if every single Trump supporter is going to go to the poll and actually punch the button there. I don't know if they factor that in completely. So you got a lot of unrest. The Fed might not raise rates, and I would just be a little concerned about getting short these treasuries still. Okay. And Larry, I don't think Joey's coming on this AM, so you're stuck with me. So sorry about that. Let's take a look at crude. Okay, so hovering around this 49.50 area, we talked about, this crude trade being a little bit non-directional for a while. You're kind of stuck in the middle of a profile. On the weekly also, as longer we spin around below 49.50, I think we've got a chance to hit 46.23. We've talked about that. We're going to hit the dollar really quick. This is just really cool to see this. Had this profile appearing below price action on the dollar. We've reached 99. 99.06 or something like that. So here's the long-term view really is still north on the dollar. And I really like how this thing is acting relative to the euro and the action there that we talked about earlier based on some of the inflection points on the euro. So again, I think this is still kind of long and strong on the dollar, believe it or not. You've got 98.86 and 98.47 short-term numbers on the dollar. If you want to play around with that, still on the kind of buy support, maximum support is really at 98.20 on the dollar. We're going to be right back. We're going to hit gold, and we're going to move through a bunch of stocks today. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Let's hit gold really quick. Nothing's happening. That was the version of really quick I wanted to put in there. Gold just really stuck in that range. Already hit that 1278.5 up top. And the bottom of the profile on the daily is, and this is all in the scanner, 1252, and we actually played around with that the other day, or actually a couple of weeks ago. So we've explored the entire fair auction right in the middle. I mean, there are zero reasons to step into gold right now, in my opinion. And the real reason that I'm saying that is you're probably going to have a new weekly profile appear on gold, first time in over a month, or actually, no. Wow, when did that happen? First time since had this current long-term profile output in the middle of July, so you're going to have some new numbers here on the weekly. The scanner's telling you that. I'm just showing it to you on the chart. Let's take a look at Amazon really quick. Little-known stock, small amount of revenues. Going to take a look at where it's at right now after the beating it took after the close yesterday. Again, big high price stock, earnings coming out. You're rolling the dice, hanging on to stuff like this through those. But, Joey had talked about it. If your long-term MO is to just have, big bad stocks like this in your investment portfolio, a lot of times you don't want to, you just kind of like the earnings are what they are and you're in it for the long haul. But, now, for traders out there that have kind of looked at this and said, I don't want to suffer through a possible 60-point rally or 60-point cave-in, you got your action now. So 761 is the bottom of a weekly profile. It's really good support, in my opinion. It's the kind of Custer's last stance on the long-term profile, and we are trading about 774 this morning. After market yesterday, with the craziness that happened right after the earnings, we actually looks like we reached a low about 745. But when things settled out, we stayed above 761. That's going to be your chance to play defense on this, and we'll have to look at David White's report later to kind of get some fundamental slants on this. I think that technically 761 is a decent number, and that's where you're probably going to be looking to play the high probability game around that. I mean, we're trading 774 right now. The S&Ps are up about 5. They did take a hit yesterday, but again, I think that's kind of where you got to let the market come to you on these type of things. You don't just jump into them. And that inflection point 761 is a really important number. All right. Pull up some other stocks that are earnings related from yesterday, just so you guys get some landscape here. Okay, so this week, let's just see, it looks like we're printing about 64 right now. So Big Mo, Altria, 65.38. We talked about this week, waiting for that to come to you on the short side. And it happened, almost to the tick there. 65.34 unfair highs or unfair lows are 65.38. So 5 cents got within that neighborhood's backed off. Think this is still a decent short. I think you kind of let the market come to you on this one. I think, the broad stock market in general, even though I look at some of these reports that come out, I get in the emails, a lot of them are still bullish. I just don't see it right now. I think the leverage is towards the short side, and that could drag down a lot of these stocks that we're looking at. Let's take a look at Google. All right. Looks like we are printing this morning about 807. So this is the deal on Google. This is our weekly, that big number 789.75, and we're trading about, like I said, 807 and some change. So there's bottom of the box on the daily. We're back up in this area right now. So what do you do with Google? I think you got to pass on some of these longs, even on some of these strong stocks. But if you're going to buy stocks, I think you still got to play the relative strength game there. Facebook, looks like we're printing about 130 here. So gotten right into the neighborhood of the unfair highs, kind of rattling around there. Could Facebook pull back to 123.70? Yes, but right now it's sitting right at that top of the profile support. Those are the two big numbers on Facebook. Let's take a look at Amgen. I almost said Amgen. Printing 155, that neighborhood this morning. So this is the weekly. It kind of started to become a weaker stock relative to profiles recently. And 155 is pretty well below daily profiles now. So I don't think you try to pick this thing up on sale. I think it's a pass. And if you're in it long through the announcement, sometimes it feels better to get out of things. Trust me on that one. Baidu. These are earnings related stocks again. 182.25, so trading up. Here's the long term on Baidu. Kind of a no trade right now, I think. Nothing doing there. Let's take a look at Bristol Myers. Okay. BMY. All right. 52.17. So here's Bristol Myers on the long term. You guys know the fundamental story on this one. Hadn't really, I mean, let me, okay, so 52.17 again. So 53.90, I think you could whack this thing again on the short side. It's been a nice kind of wait and see situation, but playing defense above 53.90 might be in order on this one, on the short side, that is. Let's take a look at, Ford. Trading about 1173. Not a lot of action here. Again, you know, I think 1135 is definitely in order on this one. And I think the market could continue to drag some things down with it. So just sit tight on that one. LinkedIn. Okay, we're going to take a look at LinkedIn after the break, and stay tuned. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show, and I think we're honored to have Larry Pesavento on with us. Larry, you there?
Yes, I am here, young man. How are you?
Doing good. Good to hear your voice.
I have a question. When the next time Joey comes on from Hong Kong, ask him about they're offering apartment units now in Hong Kong, 6 by 10, 6 feet by 10, 60 square feet, and they're $7,000 a square foot. That means that 6 by 10 basically is like Club Fed is a well, it is. You know, it's basically it has a bathroom and it has a little kitchen in it. Can you imagine that, 6 by 10, and having something like that? And it goes for $150,000 US dollars. Just ask Joey to check it for us.
I will.
You would, because we have an interesting, a lot of friends in Hong Kong who would like to know what's going on over there. But that's what we had heard from one of our friends. So just ask him if he could heard anything about it or double check it.
Yeah, it's one of the most unaffordable real estate markets on the planet, as you know.
I remember 3 years ago, a Chinese man bought a place up on the top of
Victoria. Up there.
Victoria Peak, the nicest place there, at the very top. It was a 5-bedroom Spanish house with a 3-car garage and a swimming pool. He paid $66 million US dollars for it. That was $20,000 a square foot US.
No, I believe it. I mean, it chokes me like when I go there and some friends, we kind of ride around and they point out, like he's talking about up near Victoria Peak up there. Having a swimming pool and a couple of bedrooms and a 2-car garage, you're looking at north of $50 million. It is completely believable what you're saying, and it's shocking. You're like, what in the world? You could own half of the county here I'm in North Carolina for that kind of money. It's crazy.
Okay, listen, I want to let you go, but don't forget, vote early and vote often.
Great. Awesome. Thanks, Larry.
See you later, buddy. Bye-bye.
Okay. Bye. All righty. Yeah, it's what Larry's saying is true. That is, it's stunning. I mean, you won't believe it until you actually see the paperwork on those places. It's crazy. I've got a friend there. He's not in that area, but he plopped down $25 million US dollars to have a like a kind of a 2-story. Pretty much battened in with other, that are touching his house. Actually, $25 million. I mean, it is, and I don't see that kind of upside hanging out there. It's not that awesome to live. I mean, it's great to be there. Hong Kong is a cool place. If you've never been, check it out. But it's not that cool. You know, the coolest thing about the place, and maybe Larry would agree with this, is just kind of stumbling around on some of the streets and the markets. The street food is and some of the fruits, just wild stuff you can get there. I mean, you can also get dried lizards to put in your soup, I guess, too. But there's some killer food there. I mean, just great hole in the wall places. And there's some, you know, obviously nice places. And you go over to Kowloon, Larry, I'm sure you've experienced this too. You know, the Bulgaris of the world and you know, some of the other high-end stores, they literally pay like $400,000-$500,000 a month rent for almost in that one part of Kowloon there. And there's Chinese people with duffel bags waiting in line to get in the store in the morning to just load up, and it's a scene, man. You should see it. All right, going back to the S&Ps, looking at the internals here of the broad S&P market. This is kind of what I've been basing some leverage on the short side with lately. We've really had. I'm looking at the weekly and the daily market breadth relative to profiles. Some of the numbers really started turning early. I understand some of these stocks, the Apples and the Amazons and those type of market leaders, heavily weighted, have been just kind of keeping these indices up, and a lot of these internals have started rolling over. So if you look at the numbers, if you have the scanner, and you look at some of the breadth numbers relative to profiles, I mean, we had been edging over, and I actually think we're going to head south. A lot of things that are unknown coming up. And some of the market leaders are kind of diving at the same time. So I don't think this is over. I think that 2118 area that we looked at as initial targets, I think we're going to see much lower. So keep that in mind. The cool thing about Hong Kong too, as Larry will tell you, is that airport's awesome, and you can get anywhere in Asia really quick there. So really good centralized Jakarta, Seoul, Tokyo, Manila, Kuala Lumpur, Singapore, the whole 9 yards. They're like, you know, 2 hour, 3 hour flights away. It's get to a whole different scene. Let's take a look at the ETF sector. Let's see. I don't know what, John, if you have time to get, okay, SWN. Yep, we'll look at that. We'll look at that little stock, SWN. It's been our pet project for a long time. Taking a look at let's rank these ETFs in a daily manner. So energy's right here, let's just take a look into this while we're talking about SWN. And here we go. So let's just pull this up. There's LinkedIn. Forgot to mention that. Really cool how this works, huh? 194.38. Hit it a couple of days ago, backed off. Let's take a look at SWN. All right, so this is where there was an opportunity, 12.11, and that just caved in. So it's not really in a situation right now to look at from the long side. That trade's kind of over. We're gonna probably have a new profile today. I would bet my life on it, actually, and the scanner's going to kind of show you that. So as we look at SWN, if you're looking to play around with it again, you are below weekly profiles, but you're going to have a new daily profile outputted today and a chance for new inflection points. I mean, the question is, do you short those inflection points, or do you try to nibble on the long side? I think you got to sit tight on this one and wait till we break above daily profiles, and then we might have a chance to rally back up into that 12.11 area. That's kind of the way I'm looking at this one. All right. With what's been going on in the yuan, whatever you want to call it. Here's the Shanghai. You know, we've kind of poked our head above these areas, 3090, 3100, let's just call it. Joey's been talking about there's not going to be a lot of movement here. But at some point, I'm still biased towards the long side on the Shanghai in general. There's some cool ETFs out there to trade China A shares. So might want to do a little research and look around on those. There's quite a few opportunities there. When we come back, we're going to take a look at the Chinese currency and a couple other things before we close the show. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Just to sum up some things before we hit the eject button and you guys are on to Larry. S&Ps, today we reached a high of 2129.50. I would love to see this thing get back up into 2133.34. Why? We've got, unfair lows on the 240s here. We've got that unfair low on the weekly around 2134. So I'd love to see this thing rally up a little bit more. We've reached some kind of initial targets on the downside, and that will be an area to kind of pick about on, play some defense above today. Gold, we've talked about that. Crude, we've talked about that. I think crude's going to just continue to sell off. The dollar, long and strong on that one. A couple other stocks of note before we head out here. I'm sorry. COP, ConocoPhillips. Oh, man, daggone, come on. Here we go. Pre-market printing about 44.29. So here's the unfair highs, 44.89. I think you can actually sell this. I know we don't like to see things crowd inflection points up there, but I think you can sell COP again there and play some defense, especially considering the sentiments on oil in general could drag it down, period. Copper, man, reversed up, 214.05. What a pain in the butt instrument this has been to trade. But look at stepping back and look at it, lower highs, higher lows. We're back above 214.05. I was trying to look at that to try to sell that. Nothing long term, but man, did we power through it. So again, this is kind of back in the balanced area. Nothing to write home about on copper. Let's take a look at Twitter really quick. Man. Okay, so 1749. This is 1749 right there. There's the unfair low, 1718. That's an inflection point you can play around with, but very scary little stock to go long. But I want to point this out like I did the other day. We've got profiles edging higher, actually. So not a terribly bad situation to try to, nothing long-term, play around with that. Might have a little bit of a trade and bounce there. 17, 18, play defense below. But again, this stock is susceptible to the latest news announcements that somebody wants to take on a mountain of debt and try to make something work. Let's take a look at Coca-Cola. Obviously, news related lately. A lot of long-term holdings on this one, trading about 42 right now. So I think you got better things to spend time on out there. I think the market's going to drag down a lot of these stocks. We looked at the breadth in our scanner. The internals are not looking good, folks. Not at all. Let's take a look at General Motors. Printing about 31.33 this morning. Again, I think 30.43 is a foregone conclusion on this one and possibly even lower. So just stay away from trying to pick this thing up as a long-term investment yet. Guys, got about 5 seconds left, and want you to stay tuned for Larry, all the other hosts on TFNN. You will thoroughly enjoy it all day. And we'll be back again Monday. Thanks for joining us. We'll pick it up later.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.